So good morning all. Today's session is on assessment procedure and audit procedures under GST Act. Assessment, like we do on Income Tax Act, is nothing but assessment of tax liability which has to be payable by the registered taxable person. In Income Tax Act, we say the taxable person as assessee. Under GST Act, we will say the assessee as registered taxable person. So, assessment means determination of tax liability under the GST Act. How much tax he has to be paid under central tax and state tax under GST. So there are basically four types of assessment under GST Act. And audit means examination of records, written and other documents. During GST audit, the proper officer or the concerned person will check the returns already filed by the registered taxable person or the records and other documents maintained by the registered person. So as I said, there are basically four types of assessment. Self-assessment is the first type, which is nothing but like we do on Income Tax Act, the registered taxable person himself will furnish all the required particulars and furnishes the return on the annual basis. So provisional assessment is nothing but when a registered taxable person is of no clue about the value of goods and services to be supplied to the recipient, or in the case where the registered taxable person is confused about the rate of tax to be applied for the supply, he will apply to the proper officer for to consider the supply on provisional basis. So he will apply to the proper officer an application with a bond saying that any difference of the tax bit of the provisional basis and the actual basis will be paid by him along with the security having 25% of the bond value. So after the application has been applied by the registered taxable person, the proper officer will reply to that notice within 90 days saying that this is the tax rate you have to be paid and this is the value of supply. So once the supply has been made, final assessment order shall be passed by the proper officer within 6 months from the date of provisional order. Within 90 days, the proper officer has to give provisional order. After 6 months from the date of provisional order, he has to pass the final assessment order, wherein he has to mention the actual rate of tax to be paid and the actual value of supply. The difference between the actual rate and the provisional rate will be paid by the registered taxable person. If the tax liability under the final assessment order is more than the provisional order, interest at 18% will be calculated and paid by the registered person. If the tax liability is less than the provisional order, interest will be paid by the department if the payment is made after 60 days from the date of final assessment order. So once all the assessment order has been made and tax liability has been settled off, the registered person has to apply for has to apply an application for a release of the security he has made by applying for with the bond and the security. So once the return has been submitted by the registered taxable person, it will undergo scrutiny. It is nothing but the correctness of the return being filed will be checked with the corresponding documents which has been filed by the other recipients with the GST portal. So while undergoing scrutiny, the proper officer will find any discrepancies. Any discrepancies found by the proper officer will be sent to the registered taxable person. Within 30 days, he has to either accept or give an explanation to the discrepancies made by the proper officer. So if the registered taxable person accept the discrepancies and pay the final tax liability, the security will be done. If not, the registered taxable person has to give an explanation to the proper officer regarding this was the claim you have made and this was the explanation we are giving. So if the proper officer is satisfied by the explanation, he will take no action against the taxpayer. If not, the explanation is not satisfactory, the proper officer has the authority to conduct an audit under Section 65 or or authorized to do special audit by a CA or CMA, or he can undertake inspection, search and seizure procedures, or can initiate proceeding under Section 73 and 74. So in case of assessment of non-filers of returns, in this case, uh, they are the taxpayers who have registered under GST but not filed the GST returns for the monthly or the quarterly basis. So in this case, the taxpayer has to file the return within 15 days from the date of receipt. Generally, the proper officer will give notice to the taxpayer asking to file the return within 15 days. If the taxpayer has not filed the return within 15 days, the proper officer will make a final assessment order stating the final tax liability and the interest and the penalty applicable. Within 30 days from the date of assessment order, the taxpayer has to file the return. If he has not filed the return, if he filed the return within 30 days from the date of the final assessment order, the such order passed by the proper officer before shall be withdrawn. In case of unregistered persons, here means the persons shall mean to be who are eligible to be registered under GST but hasn't registered, and whose registration has been cancelled by the proper officer for not filing the returns at the time period. So notice to be served to provide response within 15 days. Opportunity of being heard will be given to the taxpayer for the order. If the taxpayer files the return, or if the taxpayer submits a reply to the proper officer within 15 days time limit, the order shall be deemed to be withdrawn. So summary assessment. If the proper officer thinks that the taxpayer has the liability to pay tax under GST and without issuing assessment order, it will affect the interest of revenue. If the additional commissioner, if the proper officer thinks that the taxpayer has liability to pay tax and his liability will affect the revenue's interest, he will request the permission of additional or joint commissioner to conduct assessment on a summary basis. Such assessment order shall be assessment order shall be withdrawn if the taxpayer has filed the application to the proper officer for withdrawal of the application, or if the assessment order find erroneous by the proper officer himself. So audit by tax authorities. Here the audit shall be taken place at the principal place of the business of the registered taxable person. Before conducting the audit, 15 days before, the notice shall be intimated to the registered taxable person. Within 3 months from the commencement date of the audit, the audit has to be completed by the tax authorities, which will be submitted to the proper officer. Then the proper officer will intimate to the assessee, intimate to the taxpayer regarding the discrepancies and the final tax liability to the taxpayer. Such audit findings has to be finalized and informed to taxpayer within 30 days of the audit conclusion. If the audit results in any erroneous refund claim or wrong availment or utilization of ITC, action shall be taken as if the assessee has willfully misstated his accounts. To claim wrong ITC shall be initiated. In special audit cases, with prior approval of assistant commissioner, with prior approval of commissioner, the assistant commissioner shall initiate the proceedings which requires the taxpayer to get his accounts audited by a chartered accountant or CMA. Such signed audit report has to be submitted within 90 days from the date of order passed by the assistant commissioner. So all the audit related expenses has to be borne by the commissioner. In the same case, opportunity of being heard also has to be given to the taxpayer. Any audit findings finalized has been informed by the chartered accountant to the proper officer. Then the proper officer shall intimate the such findings to the taxpayer, informing him to pay the final tax liability. In this case, if the audit results in any shortfall of ITC or shortfall of any tax liability, he will be treated as a person willfully acted to claim more ITC than he is eligible to claim.